As a rather interesting week is about to end, we open a window in what next week has in store for the markets. On the monetary front, the Fed's interest rate decision on Wednesday seems to be dominating the market's interest, while BOE's interest rate decision is also expected to attract substantial attention on Thursday. On Thursday, we also note the release from Switzerland of SNB's interest rate decision, while we tend to highlight from Japan BOJ's interest rate decision on Friday. As for financial releases, we make a start on Monday with UK's GDP and manufacturing output rates for April. On Tuesday, we get UK's employment data for April and Germany's CEF indicators for June. On Wednesday, we note the release of New Zealand's current account balance for Q1, Japan's machinery orders for April, China's industrial output for May, Eurozone's industrial production for April, and from the US, the retail sales growth rate for May. On Thursday, we get New Zealand's GDP rate for Q1, Japan's trade balance for May, Australia's employment data also for May, the US weekly initial jobless claims figure, and the US Philly-Fed business index for June. Finally, on Friday, we note Eurozone's final HICP rate and the US industrial output, both being for May. The USD index seems about to end another week in the greens. Yet, as the US CPI rates for May are still to be released, volatility may still be present for the greenback. In the coming week, we highlight the release of the Fed's interest rate decision. On Wednesday, the bank is widely expected to hike rates by 50 basis points, raising it to the 1.25 to 1.5 range. And Fed fund futures tend to imply a probability of 95% for such a scenario to materialize. It should be noted that on Wednesday we'll be also getting the new dot plot, and investors are expected to be eager to learn on where the rates are about to land as per Fed policymakers. Also, new projections are to be released which would show the bank's thoughts about the possibility of a slowdown of the US economy or even a recession, as well as how inflation is expected to behave. Overall, should the bank actually proceed with a double rate hike as expected, and beyond the new dot plot and economic projections, the next point of interest is to be the Fed's forward guidance. Should the bank actually sound confident and hawkish, foreshadowing more interest rate hikes to come, we may see the US dollar getting some substantial support. Also, please bear in mind that Fed Chairman Powell is to deliver a press conference half an hour later and could increase volatility for the USD as well. As for financial releases, we note in the coming week the release of the PPI rates for May on Tuesday and the retail sales growth rate for May on Wednesday. On Thursday, we get the number of house starts and building permits for May, the weekly initial jobless claims figure, and the Philly-Fed business index for June, while on Friday, we note the release of the US industrial production growth rate for May. The pound seems about to remain relatively stable against the US dollar, gains against the euro, as well as against the JPY. In the pound's fundamentals, Johnson's government does not seem to be out of the woods yet, despite the UK PM actually winning a leadership vote within the Conservative Party. Hence, we tend to maintain our words. In the coming week, we highlight BOE's interest rate decision. On Thursday, the bank is widely expected to hike rates by 25 basis points. It's characteristic that currently GBP/ORS implied that the market expects fully the bank to raise rates from 1 to 1.25. Also, it should be noted that the market seems to be pricing in more rate hikes to come in the following meetings. Hence, for the pound to get some substantial support, the bank will have to demonstrate its determination to curb inflationary pressures in the UK economy by proceeding with further rate hikes, keeping a confident and decisive hawkish tone in its accompanying statement. Anything less could cause the pound to weaken, yet such a monetary policy tightening path could weaken the growth opportunities for the UK economy. It should be noted that market analysts tend to underscore the possibility of stagflation making its presence felt in the UK economy in the coming months. Also note that the UK economy shrunk in March, while also the manufacturing output growth rate was in the negatives for the same month. We expect pound traders to keep their focus on April's GDP and manufacturing output growth rates on Monday, and should the rates decline further into the negatives, we may see the pound weakening. On Tuesday, the 14th of the month, we note the release of UK's employment data for April, and should the data align towards showing a loosening UK employment market, we may see the pound retreating further. JPY was allowed to slide lower, reaching a new 20-year low against the US dollar on Wednesday, yet USD JPY bulls seem to take a break on Thursday. Also note that the yen retreated against the euro and the pound in a sign of a broader weakness. As we have mentioned in prior reports, the widening monetary outlook differentials between BOJ, which maintains an ultra-loose monetary policy, and other central banks which have started hiking rates tend to weigh on JPY. It should be noted that BOJ Governor Kuroda on Monday reiterated the bank's narrative for the necessity of its ultra-loose monetary policy. BOJ Governor Kuroda was reported by Reuters stating that BOJ's priority was to support the Japanese economy, underscoring an unwavering commitment to maintaining powerful monetary stimulus, while also stated that monetary policy tightening may not be suitable for the Japanese economy. Overall, as interest rate differentials continue to widen, the yen will have to carry around an additional burden. Yet the weakening of the yen seems to have wider repercussions as the imports to the Japanese economy become more expensive, strengthening inflationary pressures in the Japanese economy and squeezing corporate profits. On the other hand, the Japanese government may be relying on low interest rate for its spending. In a wider perspective, we must also take into consideration that the Chinese reaction will be as the manufacturing sectors of China and Japan are antagonistic, and the Japanese products become more attractive as they become cheaper. The possibility of BOJ being accused as a market manipulator cannot be excluded. Hence, we would like to highlight BOJ's interest rate decision on Friday. The bank is widely expected to remain on hold, keeping rates at minus 0.10%, yet the main focus is expected to be on the forward guidance, and should the bank maintain a dovish tone defending its ultra-loose monetary policy, we may see JPY weakening further. Also, we would like to express our worries for a possible market intervention to defend the JPY by the Japanese government or BOJ. It's characteristic that Japan's Finance Minister Suzuki, when asked for such a possibility, declined to comment, leaving such a prospect on the table. As for financial releases, we note Japan's machinery orders for April on Wednesday and highlight on Thursday Japan's trade data for May. The common currency seems to be weakening against the US dollar for the week, but also against the pound, yet gains against the already weak yen. It should be noted that the lion's share of the losses against the US dollar seem to stem from ECB's interest rate decision on Thursday. The bank, as was widely expected, remained on hold, keeping the refinancing rate at 0% and the deposit rate at minus 0.5%. Nevertheless, it indicated that inflationary pressures in the Eurozone are expected to remain high, and that the bank will end its asset purchases program and start hiking rates in a gradual approach in July, and then again in September, with the second rate hike possibly being wider. Also, ECB President Christine Lagarde in her press conference stated that no fragmentation will be tolerated. Nevertheless, should fragmentation occur, in combination with the expected substantial slowdown of growth in the Eurozone's economy and the heavily indebted countries in the south of the zone, may imply further difficulties as the debt service cost is to rise substantially. It was characteristic how the euro started weakening against the US dollar during Lagarde's press conference after reaching a high point. So the overall economic outlook of the Eurozone may be worse than what was expected by the market. Hence, market participants started repositioning in the light of the new information, especially in countries such as Italy and Greece with a substantial debt. The situation may result in some difficult austerity policies. As for financial releases next week, we highlight German CEF indicator for June on Tuesday, while on Wednesday we get Eurozone's industrial production for April, and on Friday we note the release of the final HICP rate for May, which is currently expected to confirm the acceleration noted on the preliminary release. AUD is about to end a winning streak for the past 3 weeks, ending this one in the reds against the US dollar. It should be noted that RBA's interest rate decision to hike rates by 50 basis points, which took the markets by surprise, tended to provide some support for the Aussie in the Asian session on Tuesday, yet those gains quickly fizzled out. Nevertheless, in Governor Lowe's statement, the bank mentioned that the size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for inflation and the labor market, which may insert a certain degree of uncertainty in the bank's rate hiking path. Neither did China's robust trade data for May excite Aussie traders. It should be noted that the release exceeded market expectations as the import growth rate accelerated more than expected, while at the same time the trade surplus widened also beyond market expectations, surpassing $78 billion. Overall, the better than expected trading data from China tended to instigate expectations for the Chinese manufacturing sector to have awakened. Hence, we note on Wednesday the release of China's industrial output growth rate for May, and should an acceleration be reported, we may see the Aussie getting some support. Also, we note China's retail sales growth rate for the same month to see exactly how solid the internal demand side of the Chinese economy is. Yet, the highlight for Aussie traders in the coming week is expected to be the release of Australia's employment data for May. Should the data show a tightening Australian employment market, we may see the Aussie getting some support, as that could imply a green light for RBA to continue on its rate hiking path. The CAD may have experienced the widest market reversal, as it has relented any gains made in the first days of the week against the US dollar, and is about to end the week in the reds. It should be noted, though, that Canada's employment data for May are still to be released and could change the loonie's direction. The weakening of the CAD could be partially attributed to the comments made by BOC Governor Tiff Macklem in Thursday's American session. The BOC Governor stated that what we're indicating is we may need to take more steps to get inflation back to target, or we may need to move more quickly, we may need to take a larger step. It should be noted, though, that the bank in its financial stability report also stated that Canada's financial system faces an increased risk from highly indebted households, with more of them becoming vulnerable to rate hikes. Hence, the market's worries spiked, causing the CAD to weaken substantially. That's why we tend to highlight the release of the number of house starts for May on Wednesday. Yet before that, on Tuesday, we also note the release of the manufacturing sales growth rate for April. On Thursday, we get from Canada the wholesale trade growth rate for April, and on Friday, the producer prices growth rate for May. Overall, though, we tend to expect CAD traders to keep also an eye out for oil prices that have been on the rise, and a possible further rise of oil prices due to expectations for a tight supply of the commodity in conjunction with the possibility of higher demand could also provide a boost for the CAD. Also, a positive market sentiment could provide some support for the commodity currency. As a closure, we would like to note that we expect the US dollar to regain some of the initiative over the currencies, given the accelerating frequency and increased gravity of US financial releases in the coming week, with the Fed's interest rate decision being the spearhead. Yet, we would also note the US retail sales growth rates for the possibility of increased volatility for USD pairs. Specific currencies may come under the spotlight at certain moments and act independently. For example, the pound and the yen could gain on attention at the release of BOE's and BOJ's interest rate decisions, respectively. On a more exotic note, we would also like to make a comment for Turkish lira's weakening against a slightly strengthening US dollar yesterday. The weakening of the TRY was mainly caused by extensive market worries for inflation in Turkey, which has reached 76.5% year-on-year, while at the same time, FX reserves seem to be depleting. It should be noted that Turkish President Erdogan at the beginning of the week more or less vowed that the Turkish government will cut the interest rates of the central bank further. It seems that the Central Bank of Turkey and the Turkish Finance Ministry announced a series of measures to support the economy on Thursday's American session, providing support for the lira. Yet, such actions were not able to turn the tide, as the lira retreated once again in today's Asian session. Should the unorthodox economic policies of President Erdogan continue, we may see the lira continuing to slide lower. Welcome to the technical analysis part. As I mentioned, my name is Peter Yusuf. I'm the senior analyst with IronFX. Now, in front of us, in front of your screen, we have the US dollar index. It's the 4-hour chart. The US dollar index, which had a nice steep rise yesterday in the American session. And it's interesting how the index actually was puzzled by the 102.75, which we have mentioned as a mid-level, yet seems to have been able to break above it during today's European session. Now, given that we still have the US CPI rates for May, which are to be released in the American session today, should the rates actually show accelerating CPI rates, we may see the index rising further, starting to aim for the 103.95 resistance line. Let's switch this now to a support line. There we go. This one as well. Let's go hunting now for a new resistance line above the 105. Let's have a look. Drill out to the 1-hour chart. 1-day chart. Here you go. No, it's even higher. Weekly chart. Nada. Nothing here either. So practically there is none. Drilling back into the 4-hour chart. $103.95, 105, 100 pips upwards with 106. Put this in red. Let's change the labels. We switched the S3 from the 99.80 to the 101.30. The S2 is now the 102.05. The S1 is the 102.75. The R1 is the 103.95. The R2 is the 105. And the R3 is being placed at 106. There you go. So we tend to maintain a bullish outlook for the index as long as the upward trend line is being maintained. Albeit note that a steeper upward trend line seems to have started to form. Note that the RSI indicator below the 4-hour chart tends also to imply the bullish sentiment as it remains near the reading of 70. At the same time, though, note how the price action has reached the Bollinger Band, which may force it to a correction or even some stabilization. The next stop, should the bulls maintain control over the index, may be the 103.95, which provided resistance around the 19th of May here. Also this period, as well as the 28th of April. Higher than that, we note the 105. The next possible target for the bulls could be 106. Should the bears take over, we would expect a reversal of the price action to downwards, breaking the upward trend line, Let's readjust this a little bit. Let's also note the possibility of a new resistance line, upward trend line. So we note the steepening here. We would expect this upward trend line to be broken, as well as the 102.75, and for the index to start aiming for the 102.05 in order to switch our outlook in favor of the bears. Moving now to Eurusd. So, nice downward motion, which was instigated actually from ECB's interest rate decision. Those characteristic how let me change that direction. It was characteristic how practically the S1 1.0825 was broken. 1.0625, and has now been turned to resistance line. Let's readjust these labels. 1.0925. Yeah, 2 is now the 1.0740. The R1 is being placed, it's now the prior S1, the 1.0625. The S1 is now being placed at 1.0480. S2 at 1.0355. Let's go hunting for the S3. Let's switch now to the daily chart just to get a better look. Way back. The S2 being reaffirmed here. That would be the 22nd of December 2016. It's a new low point for resistance lines. Should be, there is no lower point than this. Here it is. So be placing it somewhere here. That was a nice touch. And that was around November. Let's have a look. December 2002. I don't know how valid this actually is after 20 years. But nevertheless. H4. So given that the price action has broken the lower boundary of the pair sideways movement, the 1.0625, which has now turned to a resistance line, we tend to switch our bias for a sideways motion in favor of a bearish outlook. And the downward trend line may have started to form. Let's mark this to see if this actually comes into effect. Yep, seems it does. However, I would like to see lower lows and lower highs to reaffirm the bearish trend line. Nevertheless, to the downside, note how the RSI indicator below the 4-hour chart actually tends to reaffirm the bearish outlook, given that it remains near the reading of 30. Should the bears actually maintain control, we may see the pair aiming, if not reaching, the 1.0480 and lower than that we have the 1.0355. Pretty wide margins, I understand this, but however, the price action lets little. There are some chosen highs here, but still, we're maintaining this. Let's have a look at the CAD. USD against the loonie. That's a nice chart. That's an interesting move. The weakening of the CAD. Note that the CAD has a double test in front of it in the American session. Actually, the USD CAD has a double test. Let's drill down to the 1 hour chart to see how. Oh, yes. Okay. Let me reaffirm this. 1.26, 85. Good. Next resistance line. Somewhere here. There should be another one somewhere in the middle. Let me find it. That would be it. Yeah. In red, please. There you go. Also in red. Great. Let's widen it a little bit. Having the 1.2890 as the final resistance line. Second being the 1.2805. First resistance line to be met is expected to be the 1.2755. The support line is now the 1.2685. The S2 is being placed at 1.2615. Let me adjust this a little bit lower. Leave it. No. That could go at 1.2525. Could go a little bit low. Let's keep it that. Here it is. So we have a clear upward movement of USD CAD. I tend to maintain a bullish outlook for the pair as long as it remains above the upward trend line. Note you that the RSI indicator is above the reading of 70, implying that the bulls have the dominance here. However, may also imply that more or less the pair may have reached overbought levels. So a correction lower should be in the cards for the pair and should not take markets by surprise or traders by surprise. Such a correction lower could shift practically the upward trend line guiding the pair to the right, and actually make it less steep. Nevertheless, should that be only a correction, the upward movement movement should continue, aim for the 1.2755, followed by the 1.2805 and even higher the 1.2890. A small catch, note that in today's American session, we have from the US the CPI rates for May, and at the same time the Canadian employment data also for May. So we may see increased volatility for the pair at the time of the release, maybe even a little bit afterwards. Quite interesting what's going to happen here. USD JPY stabilization seems to be taking place here. The price action seems to remain stable, revolving practically around the 134 level. Well noted. We tend to maintain a bullish outlook, yet I would like to issue a warning here. Note how the RSI indicator is dropping. So we have somewhat conflicting messages. We would expect the RSI indicator to take over and practically drive the pair lower. We would see it breaking the upward trend line, guiding it, breaking the 133 and start aiming for the 131.35 should the bears actually take over. On the flip side, the stabilization could also occur, and in which case we would expect the price action to remain around the 134 level. To the upside, we note the 135 and even higher the 136.50. Let's have a look now at the pound. Well, the pound has been weakening, but mostly remains in a sideways motion against the US dollar. I would like to see the pair breaking clearly. There you go. It's about to happen. Sorry people, this should read 2330. Let me correct that. And this would be the 1.2165. There you go. So there has been a downward motion of cable. However, we would require clear breaking of the 1.2470 before calling in the bears, which is about to happen practically in the next 4 hours or so. Note that the RSI indicator is moving clearly downwards, approaching the reading of 30, so the bears seem to be full in the game. We may see conflicting forces here, as on the one hand we may have a weakening pound, and on the other we may have a strengthening US dollar, which could drive cable bears to the forefront. To the downside, and should the 1.2470 be broken, which is actually being tested right now, and we would require a clear breaking of the S1, we may see the pair start aiming for the 1.2330, which provided support here and was able to reverse the downward motion of the pair around the 19th to 20th of May. Lower than that, we note also the lowest level in our chart, that would be the 1.2165, which was providing support around the 12th of May. To the upside, and should the bulls take over, we would expect first the pair to break the downward trend line which we have marked, break also the 1.26, otherwise the pair maintains its movement within the sideways boundaries of the 1.26 and the 1.2470, and start aiming for the 1.2775. Let's have a look now at USD TRY, how that's been behaving. So a stabilization. Note the wide drop of USD TRY, the strengthening of the lira yesterday in the American session. Action higher once again in today's Asian session. Note also how the pair seems to have stabilized, and that has happened just above the 17 support line. So should the price action actually break the upward trend line, we would expect a stabilization to occur for the pair just above the 17 support line. On the other hand, we have to note that the RSI indicator is just above the reading of 50, once again implying that the bulls are losing steam and the pair seems to be calming down. Similar reading or signal could be coming from the Bollinger Bands, which have started to converge, implying that the volatility has lowered. So we tend to maintain a sideways movement bias should the price action clearly break the upward trend line. Should the price action move below the 17 support line, so break below it, start aiming for the 16.4, maybe even break that as well, that would be a signal for a bearish outlook. And in that case, the bearish trend line should be drawn in order to see the boundaries. To the upside, and should the bulls regain power, we would expect the pair to break the 17.6 and start aiming for the 18.32. Let's have a look at this. Well, the Aussie has broken in a down movement, the sideways motion that it was in. It was between those 0.7155 support line, now broken, turned to resistance. We're going to be switching this into red. And the 0.7265. To the downside, let's readjust the support lines. $69.50. And the 68. Let me read this again. 5. The R1 is being placed now at the 0.7155. The R2 is being placed at the 0.7265. And the R3 is being placed at 0.40. No, that's not holding. It is. So the pair has broken the past low boundary of its past sideways motion. We tend to maintain a bearish outlook as long as the price action remains below the downward trend line. And we would expect practically the pair to start aiming for the 0.7035, which had its support around the 25th and the 6th of May, as well as around the 2nd to the 4th of May. Lower than the S1, we also note the 0.6950 providing support here. And the lowest level in our chart would be the 0.6825 providing support here. It was how beautifully it was able to reverse the downward motion, which was instigated on the 5th of May. Note the RSI indicator is below the reading of 50, and it's actually just below a downward trend. So we may see the bears maintaining control over the pair and driving it lower. Note how the price action corrected after hitting the lower Bollinger Band has stabilized, seems to have formed some distance, and is able to move lower towards the 0.7035 for the time being. Let's also have a look at gold. Okay, the sideways movement is still present, not much here. Nevertheless, there are some slight bearish tendencies. Readjust the labels. There you go. And the precious metal may have started to aim for the 1836. Note how the RSI indicator is moving downwards below the reading of 50, starting to aim for the reading of 30. We would like to see, though, a clear breaking of the 1836 before calling in the bears. Nevertheless, the downward motion should be mentioned. And note also how the RSI indicators, so the Bollinger Bands, are converging and have narrowed given the lower volatility for the precious metal. Last but not least, WTI. People were talking about new highs here. Following a wide there we go. All of these are now being turned into support lines. There we go. Let's go hunt for new resistance lines. Definitely the one will be placed here where it's the peak. It's going to be the 121.30. And that, let's drill out. Okay. We have some higher points which could be of reference, as they're not so bad. Another one here. Note the peak here. And that would be the 123.90. Sorry, let's do this in red. The highest level would be here, which is the highest price. And that would be in red, the 126.5. Let's readjust. And the first resistance line being the 121.30. S1 being placed at 118.80, which actually provided some evidence about its validity yesterday, during today's Asian session to be exact. Sorry, that should be 180.50. 115.80. And 113. So we tend to maintain a bullish outlook as the price action of WTI remains above the upward trend line which we have formed. It was tested actually in the early European session today, late Asian if you prefer. We tend to maintain a bullish outlook and we would expect the price action to break above the 121.30 and start aiming for the 123.90. To the downside, and should the stabilization occur, we would expect the price action to remain between the 121.30 and the 118, breaking the pre-mentioned upward trend line. Should the bears take over, we would expect the price action to break the upward trend line, break the 118.50, and start aiming for the 115.80. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Today we will look at the FX market, provide a definition, and discuss the times you could trade Forex. So what is the FX market? FX or Forex is an acronym and it stands for foreign exchange. The FX market is a market where you can trade, or if you prefer, exchange currencies. It is an over-the-counter market and it's a decentralized market with no actual physical central exchange. Thus, it is an over-the-counter market. It's open 24 hours a day, 5 days a week, and closes on weekends from midnight Friday until Sunday at midnight. The typical Forex day is being split into 3 main sessions. We make a start with the Asian session, which starts around midnight GMT +2, with the Sydney and Tokyo being open. This carries us through until the European session, which begins at around 9 o'clock in the morning, when Frankfurt and a bit later London open. Later on, the American session begins as the New York Stock Exchange opens, which carries us through until midnight, when the next Asian session is to start. It's the world's biggest market, and it's characteristic that in the past years the FX market has a daily turnover of around $6.6 trillion. Imagine what trading opportunities occur when the $6.6 trillion exchange hands each day. So who actually participates in the FX market and is able to create such a huge daily turnover volume? Well, the first category includes governments and central banks. National governments and central banks interfere in the FX market either to strengthen or to weaken their currency, by buying it or selling it respectively, and to readjust their foreign exchange reserves. The second category includes commercial banks and other financial institutions which attend to foreign exchange needs for their customers. For example, for imports and exports, and for small-scale transactions with other banks. The third category includes companies repatriating profits. Say, for example, Toyota has a factory in the UK, and at the end of the year it wants to repatriate the profits of the year back to the mother company in Japan. It will have to go through the FX market to be able to convert the gains made in pounds to Japanese yens in order to send back home. The fourth category is investors buying assets in foreign countries. For instance, if a European investor wants to invest in a US stock exchange, he or she will have to change his euros into US dollars to be able to invest in anything in the US. The fifth category is speculators. Please note that speculation is the practice of engaging in risky financial transactions in order to profit from short-term fluctuations in the market value of a tradable financial instrument. Last but not least, tourists and travelers. On an individual basis, tourists do not have the same impact on the market, but at certain points, time-specific tendencies in the tourism industry could overspill in the FX market. Say, for example, in the summer months, if UK citizens want to spend their vacation in Southern Europe in countries like Portugal, Spain, south of France, Italy, Greece, Cyprus and Malta, they will have to exchange their UK pounds into euros in order to spend during their vacation. So this should be taken into account since there are millions of tourists. We hope that we were able to portray some of the key categories, albeit we're certain that more exist.
everyone, my name is Emily, and today I'm going to give you a short walkthrough of our website. Let's get started. So this is our main page. On your top right corner, you see the option login for existing clients, and then you see the option register. So if you're not an existing client, we should fix that, right? And then we have the search bar, and from here you can choose the language that you want to use with us. Then we move on to markets. With IronFX, we offer over 200 trading instruments. For example, we have Forex, metals, indices, commodities, futures, shares, and cryptocurrencies. Moving on, we are going to this option right here, trading. You can find the account types, spread comparison, and a couple of trading tools. So I want us to check out the account types today. If you scroll down, you'll be able to compare the IronFX account types. You have two options right here, the live floating, live fixed spreads, and the STP ECN accounts. So with the first option right here, you have 4 different account types. We have the standard account, the premium account, VIP, and live zero fixed spread. Here you have the CFD instruments, the minimum lot size, base currency, spread, commission, and we click on expand full list, and we move on to the flexible leverage, stop out. We also offer swap free and Islamic account option. And this right here is called dedicated account manager available. So as soon as you open the trading account with us, one of our representatives will give you a call and start assisting you with your experience with IronFX. Moving on, we have the dealing department transaction hotline. Then we scroll up again and we choose the STP ECN accounts. Here, the difference is that you have 3 account types, no commission, zero spread, absolute zero. And again, we have the CFD instruments, minimum lot size, base currency, spread, commission, and we click on expand full list. And you have the flexible leverage, stop out. The difference here is that we do not offer the option of a swap-free Islamic account, but we do offer the option of having, again, a dedicated account manager and the dealing department transaction hotline. So after comparing all of your options, comparing the account types and finding what suits better your own needs when it comes to trading, you just click on register and you proceed with the account type that you wish. Then we scroll up again and we move on to platforms. As you see here, we have MT4, WebTrader, VPS hosting, PAM, and Trade Copier. Then we move on to the IronFX school. When it comes to this option, I truly believe that every broker should have this option for their clients, even if you're a beginner, even if you're an experienced trader, because at the end of the day, knowledge is power. And you see loads of options right here, but I want us to check out the newest addition, which is webinars. So here you see live Forex webinars. It is free of charge. You're not going to pay a single cent when it comes to this. You just need to register with us and get started. If you scroll down, you'll be able to see the webinar that suits you better. Which webinar is best for me? So we have beginner, intermediate, expert, and then you can, of course, view them all. Then if you scroll down, you'll be able to see which webinars are we hosting at the moment. You have English language, Spanish, Portuguese. You can just simply click on register, and that's it. Then moving on, if you scroll down, you will be able to see our educators. That's all you have to know when it comes to our webinars, but obviously if you want to know more, you should tune in and watch one of them. Then moving on, we have this option right here, which is blog. So basically here you can get inside information when it comes to Forex news, the market, and also you can get some successful tips when it comes to trading, which is actually very cool. And the next option we see here is promotions. As you can see here, you can check our trading competitions and etc. And then we have the option right here, which is partners. So as a company, we want to build a very strong, long-lasting business relationship with our clients. So that's why we offer you this partnership program. So for example, we have the introducing brokers, the affiliates, and the white labels. And then last but not least, we have the IronFX option. So whatever questions you have or whatever information you need regarding the company, you can just simply click here and you can see why us, careers, legal documents, frequently asked questions, sponsorships, awards. And if that is not enough for you and you want to learn more, you can, of course, contact us using our live chat support or by email. So that's it for today, guys. Thank you so much for tuning in and watching us. And I hope I'm going to see you very, very, very soon for our next short version of a walkthrough. Thank you very much. Have a good one.